Hi guys, so this is my analysis on gold, right? I will be doing a top-down analysis on gold. So this is the monthly time frame and what I've been looking at. We can see that we've been having this projection around negative 7% fib level and it hasn't been able to break out of that zone yet. And like I used to say that my negative 7% fib level are reversal zones, right, slash area. So that means whenever we get to that zone there is a possibility of it actually rejecting, right? And we can see if we're rejecting around us but three times now, right? So that means there's the possibility of it overall gold might actually drop down to probably around this area right here, because that is the last breakup structure we have, right? So that will be like a first retest for us to see run around that area right there that we are looking at, right? So let's go to smaller time frame, a weekly time frame, and see what gold is doing. So we can see that right around this area on gold, I'm gonna draw a zone right here. We can see that it has been trying to um it has been coming to that zone area right here, and we can see that it has not been successful. We can see that it's trying to break out of that zone, but it's not breaking out of that zone yet, right? But don't also forget that we have this kind of like M pattern right here around this area, which we know the M pattern, also known as the double top, a reversal chart pattern. So there is that possibility of it continuing to push to the downside, just like I mentioned. And I am definitely more biased towards a sell rather than the buy on gold. We can see that after we have this W pattern, we have this engulfing bear candle right here. So certainly I'm seeing this impulse correction and I'm seeing a continuation to push to the downside, right? I'm definitely seeing that based on that fact that this candlestick engulfed the previous one, right? So based on that, I'm going to put a mini fib right here. Let's see. So I drew a fib right here for us to see, and we can see that my negative 7% also aligns with this breakup structure right here, right? And that's why I used to say most of the time that the market, if you follow market structure, no matter the strategy you use, it's just like join together and make it make sense, if that makes sense, right? We can see that even despite the fact that I'm not drawing fib at the previous time, after we draw the fib we can see that it aligns perfectly well with breakup structure, so which is good. So now let's go to my daily time frame and see what we can do on that. So as we can see right here too, even in the daily time frame we see momentum of sell, right? We can see that the bear candlestick the bear candlestick are bigger than the bigger than the bull candlestick, right? Which shows that the momentum of sell are definitely still in the market compared to buy even on a daily time frame. So as we can see, right, I'm gonna draw a trend line right here, point here to point B. Let's see, just to show that we currently still on a downtrend. Let's go to my forward time frame and see. I think the visibility. Okay, so just do it on a smaller time frame. So we can see right here on gold, I am looking for a downtrend. You can see an impulse correction, right? Continuation, sometimes some sun. But before we look at You can see that there is a possibility of it actually pushing up here, continue to reject, push to the downside, or we might push a little bit further before pushing to the downside on gold. So we have to look at how the market reacts around the zone will determine our next move on gold, because we can see that we are currently around this area right here, a retest of the trend line, and also currently around this zone area right here, right? So which is significant, and that is why I said we have to be patient to see how the market reacts around the area right here will determine if you're gonna react around here to continue to push to the downside, or if you're gonna go a little bit further to around this area right here to continue to push to the downside, or if you're gonna right to like the 23.6% level before we continue to push this area right here, right? So let's see right here. Let me get to my time frame and see. Just like I mentioned, right, there is a possibility of it coming here and touch 23.6% fib level and a possible third touch of the trend line before pushing to the downside. But before we push up to this level right here, we'll want some sort of like a bull engulfing candle closes above that zone right here, retest first, continue to push above that area before continue to tank to the downside right there. That's a possibility, right? And okay, so let's go to 1 hour time frame and see. Not too much around that area, so I'm gonna draw my scenarios. My first scenario is we might come here, like I said, something like this, that if we break that zone, something like this, to get to this area right here before pushing to the downside. Or we might just continue to see a rejection pattern around the zone right here, then right to the downside, which is right there will be my first TP area, and my second TP area will be, let's make sure you break the zone, and this will be your second TP area right there. Mindful for it to at least break this previous low, retest the zone for confirmation, then we continue to ride to the downside right there. So I'm gonna put a price tag right here, which is run around this area will be first TP area, then second TP area will be around here, 992.668. So this is my quick thought on gold, guys. Overall, I am more biased on a sell. Hope you guys find this analysis helpful. If you do, please don't forget to subscribe, comment, like, and share. And I'll see you in my next analysis, guys. Thank you for watching. Bye.